Unraveling the Canadian payday loan industry, the hidden costs of borrowing. In 2023, our society has been hit with a whole host of problems, from high interest rates to inflation, and especially food inflation. That means there has been an increased need for quick cash solutions that can lead many of us down a precarious path to payday loan firms. This video attempts to highlight the hidden costs of borrowing from what some call a predatory industry. You've probably seen them on most corners, payday loan firms. Known for their convenience and quick approval, they can seem like a beacon of hope to those strapped for cash. However, they often come with sky-high interest rates that can leave borrowers in a vicious cycle of debt. A payday loan differs from a regular loan in several ways. You can only take them out for a short term, usually a few weeks at a time. There is no credit check. You pay a flat fee instead of interest if you pay on time, and the loan provider will organize your repayment based on when you get paid. In Canada, the payday loan industry is a billion-dollar business. It's not overseen by the federal government, but by individual provincial governments. It's a market that has thrived on vulnerable people struggling to make ends meet, or those who are considered underbanked. There are many people in Canada who don't have a bank account. First-time payday loan borrowers are often unaware of the hefty fees associated with payday loans. For instance, a $100 loan can carry a fee of up to $15. That's a staggering 15% interest rate for a loan that's typically due within 2 weeks. This can lead to an annual percentage rate, APR, of over 600%. Imagine you need a quick $300 to cover an unplanned car repair. You might decide to use the cash advance option on your credit card over a 14-day period to cover that repair. The cash advance would cost $7.65 in interest fees. But if you had to borrow that same $300 through a payday loan, it would cost you a whopping $51. This is equivalent to an annual interest rate of 442%, much higher than the 60% criminal rate of interest. Additionally, if you aren't able to repay the loan on time, you will be hit with an additional $40 penalty. So borrowing that $300 for your car repair will now cost you $91. Now you have to come up with $391 to pay back your $300 payday loan. The true cost of these loans, including the astronomical interest rates and hidden fees, is often buried in the fine print. It's a tactic that leaves many borrowers blindsided by the real cost of their loan, especially if English is not their first language or they aren't able to understand the loan terms clearly. A payday loan might seem like an easy fix at the time it's needed, but can lead to long-term financial consequences. Repaying the loan on time can be challenging for many of us, leading to additional charges for late fees and bounced checks. Worse yet, failure to repay the initial loan can lead to a cycle of borrowing. Many borrowers find themselves trapped in a payday loan web, taking out new loans to repay old ones. This perpetual cycle of debt can lead to severe financial stress. The payday loan industry in Canada is largely unregulated. There's a pressing need for stricter legislation to protect consumers and to create a fairer, more transparent lending environment. Financial literacy is key in battling the payday loan crisis. Understanding the true cost of borrowing and being aware of other, less expensive lending options can save many of us from falling into the payday loan trap. Alternative financial solutions like credit unions or small personal loans from traditional banks can offer lower interest rates and more flexible repayment terms. They can provide a lifeline for those in financial distress without the devastating costs associated with payday loans. So before you walk into that payday loan storefront, remember that payday loans can have hidden costs that far outweigh their immediate benefits. Understanding these costs and exploring alternatives can save many of us from the crippling debt that so often results from using these types of loans. Did you find this video helpful? If so, please consider clicking on like and subscribe so we can continue to create content for you. Thanks. And please visit our website at www.debtdetoxadvisors.com.